Hi everyone, welcome back to Bharat Nivesh with Mithun, the channel where we discuss the stock market with logic, patience, and a long term investment mindset. If you have opened your trading app today, you might have seen volatility. The market moves up one day, down the next. Every news channel is talking about wars, geopolitical tensions, crude oil prices, global uncertainty, and foreign investors. And naturally, many investors start asking one question: should I sell my stocks, or is this beginning of another market crash? Today, let's understand something that every successful investor eventually learns. Wars come and go, fears comes and goes, but great businesses continue to grow. So in today's video, let's understand why we should not panic, why India's stock market is becoming stronger every year, and why long-term investors have much more to gain than those reacting to daily headlines. Let's begin. War creates fear, but fear doesn't last. Whenever a war starts anywhere in the world, the first reaction in financial markets is almost always the same: markets fall. News channels become negative, social media becomes full of panic, everyone suddenly starts predicting another recession. But ask yourself one simple question: if every war permanently destroyed stock markets, how are stock markets at all time highs today? Let's look at history: the Gulf War, the Iraq War, Russia and Ukraine, Israel and Hamas, trade wars, COVID pandemic. Every single event caused market corrections, and every single time markets eventually recovered. Why? Because markets don't run only on emotions. Markets run on earnings, businesses continue to manufacture, people continue shopping, banks continue lending, companies continue innovating, life goes on. One thing you need to remember is never invest based on news headlines. One of the biggest mistakes investors make is allowing television headlines to decide their investments. Today, the headline says war. Tomorrow it says inflation. The next week, oil prices. Then, interest rates. After that, elections. If you keep changing your portfolio according to daily headlines, you will never stay invested long enough to benefit from wealth creation. Successful investors don't ignore risks, they simply understand the temporary uncertainty is a part of investing. We should think India is completely a different story today. One reason I remain optimistic about India's long term future is mainly because India today is not the same country it was 15 or 20 years ago. Earlier, our markets depended much more on foreign institutional investors or FIIs. Whenever FIIs sold heavily, markets would collapse, people would panic. But look at India today. The Indian market has become much more balanced. Domestic institutional investors, insurance companies, pension funds, mutual institutions, and most importantly, retail Indian investors have become a very strong force. Today, millions of Indians participate directly in the stock market. This is a structural change. This is not a temporary trend. It shows that Indians are slowly taking ownership of Indian businesses that give stability to our markets. The next thing we need to consider is Indian investors are changing. Let's think about another interesting trend. Earlier, almost every family first investment dream was buying multiple houses. Real estate was considered the only investment. But times are changing. Buying another house requires huge capital, registration charges, maintenance, property tax, finding tenants, rental issues. Liquidity becomes a challenge. Selling a property may take months or even years. But shares of fundamentally strong companies can usually be bought or sold much more easily. That liquidity is attractive. Young professionals understand this. Many families understand this. They still value real estate, but they are increasingly allocating money to quality businesses through direct stock investing. That shift is helping deepen India's equity culture. Let's move on to an interesting fact. Where did all the COVID traders go? Do you remember what happened during COVID? Millions of new trading accounts were opened. Everyone believed making money in the market was easy. Some people doubled their money quickly, others thought daily trading was the answer. Social media was full of screenshots, profits everywhere. But what happened after the easy bull market ended? Many disappeared, many stopped talking about trading, many exited after losses because short term excitement rarely survives market cycles. The market eventually separates speculation from investing. Those who entered only for quick money slowly left, but those who came with patience, those who studied businesses, those who understood valuations, those who accepted volatility, they are still here, and these are the investors who will shape India's next decade. One should have a mindset of thinking like a business owner. Whenever you buy a quality company, don't think you are buying a ticker symbol, think you are becoming a part owner of a business. If you owned a successful restaurant, would you sell it just because one day's sales were lower? No, right? You would evaluate whether the business remains strong. The same principle applies to stocks. If the business continues growing, temporary price fluctuations shouldn't change your long term conviction. If you are an investor, you should understand volatility is normal. Many new investors fear volatility, but volatility is not the enemy, it is simply part of the market. Prices move, sentiment changes, news changes, but long term wealth is built by staying invested in quality companies through different market cycles. If you are constantly reacting emotionally, you will always end up buying high and selling low. Patience often beats panic. If we consider India's long term story, it's very strong. India continues to benefit from several long term trends: a young population, growing middle class, increasing digital adoption, manufacturing growth, infrastructure spending, formalization of the economy, higher financial awareness, growing retail participation. These are structural drivers. They don't disappear because of one geopolitical event. Will markets correct? Absolutely. Corrections are healthy, they remove excess optimism, they create opportunities, but corrections should not make us forget the bigger picture. My message to investors: every generation faces uncertainty. Previous generations saw wars, oil crisis, financial crisis, pandemics, political uncertainty, yet businesses kept growing, economies kept expanding, and disciplined investors continued building wealth. So instead of asking, will the market fall today or tomorrow, ask yourself, will India's strongest companies be bigger 10 years from now? That is the question that matters. The stock market rewards patience far more than prediction. Wars will make headlines, politics will change, global events will continue, volatility will never disappear, but India's investment journey is becoming stronger with increasing participation from domestic institutions and long term retail investors. The investors who remain calm, continue learning, and stay focused on quality businesses are the ones most likely to benefit over time. Remember one simple principle: don't let temporary fear make permanent investment decisions. Stay informed, stay patient, think long term. Because in the stock market, time is often the biggest advantage an investor has. If you found this video useful, please like this video, share it with your friends and also family, and subscribe to Bharat Nivesh with Mithun for more stock market insights based on logic, patience, and long term investing. Thank you for watching. I will see you in the next video.